Hello and welcome to this Commerzbank webcast. Once a month our economist, strategist and I discuss our forecasts. We had a fairly heated discussion on the ECB this time. Will it really cut its deposit rate again by another 10 basis points to minus 0.5% towards the end of the year? This is what we had been expecting. However, now ECB representatives are starting to talk about that negative deposit rate is eating into bank earnings. This clearly places a bar higher for another rate cut. But with Southern Europe dominating the ECB Council, there's a strong desire to have the finance ministers of countries heavily in debt. And these would benefit from another cut in the ECB's deposit rate. However, we are more convinced than ever that the ECB will combine a rate cut with the introduction of allowances. The banks would then no longer have to pay penalty rates for the total excess reserves, only on part of their deposits. China too was of course a key topic at our monthly meeting. In particular, we took a close look at the latest investment figures, which are alarming. In the first 7 months of the year, Chinese state-owned companies raised their investment in fixed assets by 22%, even though their earnings collapsed by 7%. Since they are now less and less able to finance this investment from retained earnings, they are borrowing more and more, especially from state-run banks. The economy could be propped up by state-financed investment for quite some time, as the state banks have de facto access to the population's savings. However, state-run companies are thus increasingly diverting resources away from the private sector. This is weakening the entire economy. This zombification process means that China's economy faces difficult years ahead. Thanks for listening, and for more details, please see the Week in Focus.